Now, yesterday, every AI stock was bleeding out. Bubble confirmed. Game over. I saw the same headlines you saw. And for about 6 hours, the bear case looked airtight. Then Microsoft reported. Then Google, then Amazon. And I need to walk you through exactly what changed. Because if you're holding any tech position right now, this week will determine your next 12 months. Now, for months, the bear case looked like this. Nvidia funds OpenAI. OpenAI turns around and buys more Nvidia chips. Microsoft pours 13 billion into OpenAI, who then runs entirely on Azure. Same dollar, different name. Wall Street nightmare was simple. What if there's no real demand and it's just tech companies paying each other? And that was a rational fear. Here's what actually happened this week. Google Cloud, 63% growth. Microsoft Azure hit 40% and beat their own guidance. Their AI business alone is at 37 billion annual run rate. Amazon Web Services reported their fastest growth in 15 quarters. The money is no longer going on circles. Real customers outside this ecosystem are paying for this, and they can't get enough of it. Now, the catch. These companies are going to spend over 600 billions in AI infrastructure this year. Basically, Amazon's free cash flow to zero, and Meta raised capex again. The AI war is here, and it's expensive as hell. So, bubble or not? Here's my honest take. What happened on Monday with OpenAI wasn't the start of a collapse. It was a filter. The market just separated the companies converting AI spend into real revenue from the ones still burning cash on hope. Google passed, Microsoft passed, Amazon passed, and tonight, Apple passed. Now, does this mean you go all in tomorrow? No, the market will be volatile. There will be more scary headlines. There always are. But I've studied every major crash in the last 30 years, and the best entry points, the ones that made people rich, looked exactly like last Monday headlines. Now, if the market ever punishes a stock for spending too much while growing 63%, that's not a warning, it's a discount. And then Apple reported up 17% year over year, beat estimates, and the stock jumped 5% after hours. This is why this matters more than anything else. Apple is the most conservative, slowest moving major tech company in the world. They wait until something is inevitable, then they execute. Apple growing AI revenue means this is not a sector anymore, it's an infrastructure. Every company on earth is gonna need this to survive. Now, the AI bubble isn't popping, it's changing from hype to infrastructure. And historically, this is when you want to be holding the picks and shovels.